Welcome back. You're still watching Finweek Money Matters. Well, South Africa is at the forefront of emerging market asset management with 8 firms in the Towers Watson Global Top 500 survey of asset managers. This is on par with China, which is a much bigger economy. In studio with us to discuss the sector and what it takes to be a successful asset manager is Anne Cabot-Alletzhauser, head of Alexander Forbes Research Institute, and Muitheri Wahome, head of technical solutions at Investment Solutions. Ladies, thanks so much. And of course, Yana is still with me at the desk. Muitheri, let me start with you. It really is a big achievement for South Africa to still be at the top 500, given the fact that we are on par with China. Maybe give us a sense of how it is that South Africa has remained competitive in this asset management space.
Thank you very much. It's an amazing story because South Africa has a long heritage in financial services. So if you look back at the 1800s, we had British insurers coming into the Cape. In the 50s, you have the Pensions Funds Act that enables a strong pension fund industry. In the 60s, you have unit trusts starting in South Africa. We just celebrated 50 years of unit trusts in South Africa. So there have been a number of big pools of assets that have grown in South Africa, firstly because there was an enabling environment. There's been capital markets since the 1880s, and all these things have combined together to build a really amazing story of this small emerging market in South Africa, and one that we can be proud of.
And maybe if you would like to add something to it, but you always hear asset management, and it's said to be one of the sexy businesses. What exactly is it? If somebody says there's an asset manager, what are your key responsibilities? What are the deliverables for an asset manager?
Well, I think first and foremost, it's important to understand that you are legally and technically a fiduciary. This isn't your money. This is someone else's money, and it has been entrusted to you to deliver against a very specific mandate that's very clear to you from the start as to what you're supposed to do. So it's not like, let me give you the money and you go off to the races and do whatever you want. Asset management is about delivering on a promise, not a promise, on an expectation. That's a better word to use.
I think you're both from quite successful companies, but what does it actually take to be successful in this industry?
I think there are a number of things that will require success, and obviously, for a start, asset managers have got a big responsibility allocating capital to projects or trying to manage money so that they can meet client needs or the promises that they've made to clients. So for a start, they must be able to do that. They must be able to allocate money successfully. If they do that, it means that there'll be good risk-adjusted returns for their clients. It means that clients might be able to grow their wealth. It means that they would be able to grow their pension savings. So they play a big role, but first and foremost, they need to manage the money judiciously. I think the other thing that comes to play when I think of success is anticipating the way clients' needs are changing and trying to meet those needs, given that the environment is also always shifting from underneath their feet. So it's actually quite a difficult thing that they have to do every day, managing money when Greece is happening on the sideline and politics and all these kind of things. But if they're able to do that judiciously and engender the trust of the people who have given their hard-won savings to them, I think they will be successful.
I think the biggest challenge that they face is how do you separate the emotion from what the markets are going to do? So let's talk about Greece. If I was listening to the news, I would go, get the heck out of Europe as fast as I could. And yet, from a financial point of view, is that actually the right decision? And how will the markets actually respond to the information of what's going on in Europe at that time? And that is a challenge. So it's not simply about being able to analyze the numbers that makes you a good asset manager. What makes you a good asset manager is to be able to understand how the markets are likely to respond to those numbers when they become available. And as Muitheri says, it's more about understanding what risks you're taking so that you're able to deliver to the expectations of the client and not some sort of nasty surprise.
What have been, maybe what have been some of the biggest risks at the moment that are facing asset managers? We mentioned Greece. Heard rumblings of China in the background not being taken seriously. That's really said to be the big red flag. So as you know, being in asset management, what are the things that you are looking out for?
I think from where I stand, if you look historically, certainly almost over the last 20 years, the markets have been so strong. South Africans have enjoyed very high inflation-beating returns. I think one of the biggest worries out there is that we might not be able to find those kind of returns going into the future. So how do you deal with a client who's just used to markets going up? I mean, if you think about it, increasing interest rates, if you've been in the market over the last 6-7 years, you've just seen cuts in interest rates. So, you know, there are a number of things that people are not used to if you've only been in the markets for the last 6-7 years, for example. And I think that is a particular challenge because clients still need those returns to be able to grow their savings pots. But it's likely that into the future, it might be a lot harder to make those returns.
Well, it's not just that challenge of high returns. It's where you're going to get income and where you're going to get sustainable income. So if I take the risk of high returns, but I absolutely can't take a risk on what kind of income I need to be able to draw every month if I'm in retirement, where do you get that stability out there in a low interest rate environment? I think that's the other great risk that we're facing.
I was speaking to a couple of analysts, I think a couple of weeks ago, about the change in trends, and they said, you know, they're seeing the mindset shift from people that were yield-seeking towards growth-seeking. Muitheri, would you say that that is what you're picking up in terms of trends and what consumers and what clients want?
I think you see different trends at different types in different types of markets, and markets have been so good, you know, breaking records. So people start to want more. So certainly you do see risk-seeking appetite, you know, that seems to be growing. And sometimes it happens at the very wrong time. You know, often there's nervousness. You know, if the markets are looking so good, what does it mean when you have a strong dollar? What does it mean when you start seeing interest rates turn and start to rise? You know, what happens to markets? So I think there's that little bit of nervousness, but it coincides with also a very risk-seeking behavior that for some, you know, if it's been so good, you want to get some more.
Yes.
Yeah.
I think for me, you know, I think it's a fascinating industry to work in, but you know, most of us will never be an asset manager, let's be honest. So what, you know, from your experience in the industry, what is the key things that you've learned about managing your own money that we can maybe take away from this session?
Brother. I think the most important thing is never be fooled into thinking that you're in control of things. You're not. The market is in control of things. You're in control of very little when it comes to investing, which is why prudence is important. Understanding what risks you're taking is important. But I think the other great challenge that an asset manager has is to determine what's normal and what's not normal. So is the world simply evolving and I have to change my ideas about what constitutes value? Or is the world simply going to revert back to where it was historically? And that is one of the other great challenges. So you have that same as an individual investor. Are we looking at an unusual period of time where I have to do something different from now on? Or do I take advantage of the fact that the markets are just crazy right now, but they'll come back to normal?
Muitheri?
I think for me, one of my biggest lessons has been over 20 years, just seeing the growth in financial information and the access to information, whether it's on, you know, CNBC Africa, for example, or the newspapers. There's so much information, and I think if you want to manage your money, you must understand that you then have to read widely, be curious about things, understand, so that when you're talking to people in the markets or your advisors, you're able to ask questions that give you comfort and also give you a sense of what you really, help you really decide what you would like to achieve. So for me, the abundance of information has certainly been helpful. I would also say, like, you know, doctors don't often treat themselves. They're told, go see another doctor. And in the same vein, I think as an investment professional, there's a lot to be said to make use of the skill sets around us, whether it's through good advice. And don't discount that. Having a good advisor is something that you need to have, just like your doctor and your dentist and that kind of thing. Those are important people to have to be able to find financial security.
Muitheri, you speak about an abundance of information, and Anne, I want to speak to you about an abundance of products and investment products.
Oh, brother.
How do you navigate that?
That's a really good question. I think it goes back to, I think, understanding what solution you want the investments to solve for you. What is the problem you want that investment to achieve, to handle for you? And don't simply say, I just want the highest possible return, because you won't know what's in that box. But I think investments is an incredibly powerful tool, and it can get you from point A to point B. But you need to be clear on where you need to go, how much time you're prepared to take to get there, and how much variability from that target you're willing to live with. And then when you understand those dynamics, then you can start to zero in on exactly what sort of a product will deliver that to me. And that's when you probably need an advisor to help you. But you can't get an advisor to give you good advice unless you tell them what you want out of that solution, or that problem, sorry.
Muitheri, in terms of navigating through all these products that we've got, are you finding it easier? I know there have been rules that have been put into place now trying to streamline things from the National Treasury. Is this working?
I think it does, and it does because it engenders good practice amongst people, transparency and disclosure. Those are things that the National Treasury and the regulators have been big about. And clients have a lot of choice, but they need to understand the choice that they have. So they need to be able to make comparisons. They need to be able to look at the costs of the product. They need to be able to see the performance put together in a way that they're able to understand it and use the information to make decisions. So I think the actions of the regulator to influence the selling process, to influence the amount of information, the transparency, the disclosure, allowing for comparability, encouraging simplicity, those are all things that are required in an environment where you see an abundance of choice.
And fun fact sheets, a lot of the times you see asset managers and they tell you that they are the best performing asset managers from however the past year they've been fantastic. Muitheri is speaking about being able to compare, let's keep it simple, being able to compare. Is past performance a good indicator of a good asset manager, or are there other things?
Don't get me going on that.
Are there other things? Are there other things that I should be thinking about here? Then?
Well, the last thing you look at is past performance. I think what you look at is, again, I actually hate fun fact sheets because they don't really speak to the information that I really need, which is what problem will this solve. But I do think what you want to look at in a fund fact sheet is not the performance, but what is that fund manager trying to achieve? What is their target? What is their mandate? And what happened in the past absolutely has nothing to do with whether they'll be able to do it in the future. But what you do have some comfort around is that at least that's their intention. And now that you were speaking about regulations, and probably the best regulation that works on behalf of the consumer is treating customers fairly, yes. TCF. So that's going to put a real spotlight on those fund fact sheets to be very clear what you're putting out there as a proper expectation. And that's what you read. Don't even look at the performance stuff, because you won't be, not because it's not important, but because you won't be able to interpret it properly. And that's the problem.
Right. Closing comment from you, Muitheri. We've heard from Anne. Don't ever look at past performance. Look at the benchmarks. Look at the benchmarks.
I look at it. But
I think for me, from looking at the industry and the 40 years that this industry has, the modern asset management industry has been around, I think South Africa has a lot to be proud of. It's a strong industry. It's globally competitive. We continue to see firms going overseas. And I think South Africans really can be proud of a well-run and and managed industry. So
It's very professional, very professional.
So really something to be proud of.
Yeah, finding that top talent is what we need to carry on doing. Thank you so much, ladies. A big thank you to Anne Cabot-Alletzhauser, head of the Alexander Forbes Research Institute, and Muitheri Wahome, head of technical solutions at Investment Solutions, and of course, Yana Murray, Finweek editor.